Speaking of, in your tactical portfolio, right?
Yep.
Your U.S.-based tactical portfolio, you bought DoorDash, you did buy Palantir,
Yep.
and Spotify.
Yep.
Talk to me.
Well, it's graduation season, right? So we owned both DoorDash and Spotify. Spotify for 7 years in our mid-cap portfolio. So now it's not so much a mid-cap portfolio. We sold it in that and brought it into our large cap. So we're graduating it. Now, we know Spotify's been a core position in communication services for a long time, fits one of our major themes. DoorDash, I think, from a consumer discretionary perspective, gives us a little bit more broadening out. The company sitting on all cylinders, lots of momentum. We really, really, really like that name. Palantir fits our theme in terms of kind of going down in market cap a little bit. I know you love it when I say this, but a very small position, but it helps us diversify out a little bit from just focusing more on the large caps.
Okay, you bailed on Salesforce.
We did.
Which was arguably the stock of the week last week. Sold it.
Well, so we live by the sword, die by the sword. What do I mean by that? We changed our target on the S&P 500 mid-month, remember, to 5,600. And so concurrent with that change, we have shifted some portfolios around. We typically make portfolio changes at the end of the month because we largely cater to a wealth management system where they know it's coming at the end of the month. So, yeah, we earmarked Salesforce for sale a couple weeks ago. Probably shoulda, coulda, woulda. But unfortunately, we did it at the end of the month.
Why'd you sell Abbott Labs also?
Consolidating our healthcare positions a little bit tighter. We wanted to add a little bit back into United Healthcare. And we are. It's not that we're just go-go, Momo, Jojo. We think that the market could slow down here a little bit per Joe's theme. And so if that's the case, we want a little bit more defense in healthcare. And United Healthcare gives us that.
See, Weiss, I'm wondering from your moves if there's a broader statement. If we focus on the industrials, okay? Yeah. Things that are more directly tied to the global economy. You sold Caterpillar.
Yep.
What's the thinking process there? Stock that's up 11.5% year to date. Over the last month, sort of sputtered a little bit.
Yep. So Caterpillar started as a trade. I was hoping it would become something more. And I did it to broaden out the portfolio a little bit. I'm very tech heavy, as you know. And those are the biggest positions, with the exception of like a Leidos. But as I thought about it, why am I doing that? Just for the sake of broadening it out when I believe that I have the winners, and it is broad already. Leidos, a large part of their business is in healthcare. Large part of their business is commercial aviation. Another large part, and they have three large parts, is defense. So to me, that's the perfect stock, because I've got, predictable growth in it. I've got a great management team that's new. And then I take a look at what's happening with yields. Yields have really come down, the 10-year. And typically when they've come down, you've seen the market have a major move higher. But as I've mentioned over the last few months, that I think the debate's going to start raging, and it is right now, which is the economy strong as people think? Are we starting to see, as you mentioned, some dents in the arm of the consumer? And I think that's what the bond market's telling you. And that's what the equity market's telling you, because the equity market is going down when yields are going down, and that should not be the situation. So I think it's time to be a little cautious. It's time to protect the portfolio. And so I'm doing that by sticking to what I know, and when I can, shorting the Qs or something else and using that as trading.
Okay, so Amy, your view here, you don't have any new moves, I don't think, to document, but your thoughts might be new with a new month.
Right.
What do you think?
Well, I would love a rotation into healthcare. The outflows of healthcare would say that you're set up well for that, and we're overweight healthcare, so I would really appreciate that, and I think it could happen. But that said, overall, I think the market's going to be okay. I think we'll continue to get this rotation, but I think concerns about inflation are going to subside before you get concerns about a recession resurfacing. So I think we're in this sort of sweet spot where I do think you'll have better inflation data. Yields will continue to come down. That will be some support. Steve's right. The stock market and the bond market have been trading together in a way that makes me uncomfortable. But I think we're okay for the next little while. I think we'll have to revisit sort of towards the end of the summer.
So you, Brian, also you sold Honeywell.
Yep.
Maybe playing with Weiss's theme, I'm not sure, sort of, distancing yourself a little bit from economically super sensitive names like industrials can be?
Belsky and Weiss together. Yeah, so what we're trying to do is tighten our positions in industrials overall. So we took some money out of Honeywell and added it into Uber. Uber's a position that we initiated in August of last year. We added in a couple portfolios, initiated in one and added to another. So I think given the eclectic nature of the industrial sector and dispersion all over the place in terms of earnings and valuation, you want to be more concentrated actually in the names that you really like, and Uber's one in industrials that we do like.
Uber's had a rough month.
That's why we added
down more than 8% in May after having a really amazing run. Right, if you take a look at a longer-term chart, I don't know if you want to throw up a year chart. I think that'll tell a pretty good story on Uber of what that stock has done. And there you go. And you see sort of the bit of a pullback at the upper right, and that's reflective of what's happened the last month. But otherwise, it's lower left to upper right.
Very much so. I mean, if you are a sector investor, you take a look at what's going on in industrials, and you've seen the weakness in Caterpillar and the strength in other areas. We have the buyout and waste management today. It's all over the place in terms of value versus growth and international versus domestic. And Uber kind of fits that bill. And if you take a look historically the last couple of years, when Uber's down like that, you want to take advantage, and that's why we did.
You have a thought on that? You have a position in Uber still, right?
No, I sold Uber, if you recall, about, well, I guess 2 weeks ago at this point.
I'm with Brian on this one. I own Uber. I think this is the spot that you want to buy Uber. I said this a long time ago. When you look at the industrial sector, where else can you find the type of growth that this company gives you? It's pulling back technically to the 200-day moving average. It's been in decline since the 82 high in early March. I think it's a perfect spot to buy it. Could it drop another 5%? Absolutely, it could, but I'd still be a buyer.
You know, my view in Uber is that it's a retail stock. It's retail exposure, not retail ownership, although there's plenty of that there too. And that I'm not that positive on the consumer, number one. I took a cab back from, or Uber back from JFK to where I live in New Jersey last night, $250. I mean, the prices have gone.
Well, you got off easy.
But that's
what do you mean? You got off easy.
Actually, prices have
Weiss and
changed.
an Uber X on the way.
Well, yes, but not quite.
I've heard.
Anyway,
I've seen some things on social. It was like JFK to the city is like $350. You went all the way out.
I was late, too.
You went all the way out to the hinterlands.
My flight got in pretty late, and normally that would be less. But the point is that I don't think there's anybody that could say that Uber prices have done anything but go higher. And plus, I mean, has the company, part of the reason I liked it is I saw it turning profitable. I thought Dara, I still think he's a great CEO. And guess what? It went negative. So that sort of threw me for a loop as well. Do I think they'll recover profitability? Yes. And you can explain away and justifiably why it turned negative. But the point is that I don't want to own, I don't think it's cheap in the least. And I don't want to own such a consumer-focused stock at this point.
You sold Vertiv Holdings. I mean, the stock had a massive gain over the last year. Is that why you sold it?
Yes. One of the reasons that, look, I bought it in November. It's up like 60% since I bought it. That's crazy. And it's up over 300% in the last year. And it's in the heart of where NVIDIA is and all the others. It's data centers. But at that valuation, I missed it the first time it traded over 100, and I said next time it gets over 100, I'm going to sell it. So I sold it 103, and it's a great sale. Could it keep going if the market bounces back? Yes, but at like 45 times this year's earnings, what's a hardware maker, despite really good management, I just couldn't hold it on. Sometimes you got to book the profit.
What made you want to buy more GXO, which has been a bad stock? Let's just call it what it is.
I mean, flat.
This year it's been flat. Well, this year it hasn't been flat. The year it's been down almost 20.
Yeah. Well, when I was in London, I met with Malcolm Wilson, who's the CEO, and I have a constant dialogue with the company anyway, as I do with a lot of my holdings. But we spent about an hour and a half, frankly, just going over his view of the future of the company. They made two acquisitions, which are defining acquisitions. One in the U.S., where they're getting to the cosmetic space, because this company they acquired has every major cosmetics brand, number one. And number two, in the UK, in Europe, which is where 2/3 of their business is, they made a sizable acquisition. So both those are great. But the other side of it is, it does give me retail exposure, and it gives me the right kind of retail exposure. Because as more and more outsourcing goes, like for Levi's, they just did a takeover in place of all their distribution, all their logistics. So I get the retail exposure, and I get a phenomenal management team that's really focused, that's been trained by Brad Jacobs, essentially, and just really focused on driving profitability. And they've done what they said they would do every quarter and then some.